In today's video, I'm going to be sharing 5 beginner mistakes that any beginner UK investor could make and how you can avoid them and save lots of money in the long run. And we're starting that right now. Mistake number 1, not setting up a stocks and shares ISA. Now, if you didn't know, if you make a certain amount of money from investing in stocks and shares, you will eventually have to start paying tax like you would do with any other income. However, if you set up a stocks and shares ISA with your favorite broker, and I believe that all the main UK-based ones offer this, you can actually invest up to £20,000 every single tax year and not have to pay any capital gains tax on the money that you make. Having said that, one thing to also remember is that if you already do have, let's say, a cash ISA with your bank, the contributions to this will count towards that total 20,000 figure as well, so it's just something that you need to be aware of. Me personally, I have my ISA sitting within the Hargreaves Lansdown brokerage, and I have a monthly instruction to basically invest a set amount every single month, and by the time the tax year is up, I would have just about maxed out that account. So make sure that if you don't have an ISA already, you definitely open one, because I'm sure we can both agree that nobody out there likes paying tax, so why do it when you don't have to? Mistake number 2, not understanding a stock. One quote I recently heard on a podcast that was really interesting was that people spend weeks researching, let's say, a washing machine to buy, looking at the reviews, looking at the company, reading Trustpilot reviews. But on the other hand, they would jump straight into a potential investment opportunity without a second thought and knowing anything about that company. And this is so true, but it is also such a massive mistake. When you invest money into a stock, you need to understand exactly why you are investing into that company and potentially how your investment could increase over time. Now, don't worry, I understand for beginners, doing stock analysis and researching a stock isn't something that just comes overnight, and it will take a lot of practice over time. But if you want to really be successful as an investor and pick great companies, this is something you are of course going to have to practice. When it comes to the way that I research a stock, I do everything in this order. Step number 1, I basically go ahead and find out basic information about the company. What do they do? What is the management structure looking like? What industry are they in? The second thing I would then do is go and have a look at some basic financials for the company. So the things I would look at here is how much money have they made in the past years, and then what I would also do is look, has their revenue grown from each year, and what are their profit margins looking like maybe? You can find all of this information actually on that company's website. At the bottom there should be something that says something like investor relations or something like that. Because it is a publicly traded company, it is a legal requirement for them to release these kind of documents. But if you didn't want to go to a website like the company's website, you could just head over to something like Yahoo Finance, and they have all of that information there as well. And then just going back to the way I look at stocks, the final thing that I do, and probably what I would say I spend most of my time on, is looking at the future growth opportunities and news articles about that company. What does that company have on the horizon? Has there been any bad or good press about that company recently? And whether any of these things could potentially impact the stock, making it either rise or maybe it could even make it fall. Overall, there is no really strict rule on how to research a company, but definitely do not make the mistake of investing into a company that you wouldn't even be able to explain to someone if they asked about that company to you. Mistake number 3, trying to time the market. Have you ever had the conversation with someone and they have said they are waiting for the next stock market crash, or I'm waiting for a dip in this stock? This is someone that is constantly trying to time the market, and 99.9% of the time they will never get it right. One saying I absolutely love is the classic one, which is timing the market over timing the market. And basically what this means is that, let's say you invest in a good company and you just hold it through its good days and its bad days. Over a long period of time, you will eventually win based on the past 200-year results of the stock market. However, if you are trying to time the market, you could potentially miss out on the best trading days of each year that could potentially cost you so much money in capital gains, and eventually you're going to be caused with a lot of regret. This is normally when you see those same people saying, oh yeah, I was going to buy that stock when it was £50. I knew about that stock when it was only a couple dollars. I'm sure you've heard the stories about people that knew about Bitcoin. Have you got any Bitcoin now? No, I haven't. Well, why? If you knew about it, because you were probably at the time saying you were waiting for a crash as well. So never try and time the market. Get in the market with a good company, ride out the bad days and thrive on the good ones. Mistake number 4 that beginners make when investing is panic selling their positions when a stock drops a lot in one day. When it comes to investing in pretty much anything, whether it's the stock market, whether it's real estate, whether it's just alternative assets, you only ever make or lose money when you sell. And so many people forget this when they are looking at their own investments. They see a bit of bad news about their stock, they panic and they just try to cut their losses, only to look back a year later and realize if they just held on to that stock and did absolutely nothing, they would now be in profit. When you buy a stock, you are buying part of that business. You effectively become an owner of that company, a little slice of that company, I must add, but that's exactly how you should look at it. One quote that the legend Warren Buffett once said, and I absolutely love this one, and that is, if you bought a house one day and then the next day someone walked along and offered you half the money for it, would you go ahead and sell that house? Of course you wouldn't, and that is exactly how you should look at your stocks. Every single stock in the world has days where they are down, they have days when they are up. In fact, the smarter of investors would actually look at these days where they are down to potentially acquire more of that stock during those down days, as they will be getting that stock at a cheaper price. Mistake number 5, and that is not diversifying your stock portfolio. It is a common known thing for a new investor to learn about a company, do their research and get so excited that they just pile all of their money into that one investment. One thing you've probably seen lately is a lot of people talking about the GameStop saga, where it went up so much in one day and made a lot of people a lot of money. You also saw people taking mortgages out to potentially invest into this stock, and whilst this is something that could potentially pay off big, it is also a massive risk, and just like anything else in business, with stocks you should diversify too. You should aim to buy stocks in multiple niches, multiple sectors, and maybe even different countries. My top tip would be to look at something like an index fund or an ETF, and basically what these will do is give you coverage across an entire market. Me personally, I invest into a FTSE 250 fund that basically covers the 101st to 350th biggest companies in the UK, and I also invest into an S&P 500 fund that covers America's largest 500 companies. This way I have full coverage of the market, I am fully diversified, and I feel more at ease when picking my own individual stocks because I know I have cover in different areas. So yeah, hope you found this video valuable. On the side here, I've put up 2 other interesting investing videos for you to go and check out if you have the time. But other than that, I will catch you in the next one. Take care.